But what if the future of money isn't controlled by banks alone, but by algorithms, smartphones, and data? In the United States, the world's largest financial system is undergoing one of the most dramatic transformations in modern history. Behind the scenes, artificial intelligence is analyzing billions of transactions every day. Financial technology companies are challenging institutions that have existed for over a century, and traditional banks are racing to reinvent themselves before they become obsolete. But here's the surprising truth. The US financial system is not just changing, it is being rewired. From Wall Street trading floors to Silicon Valley startups, a new financial architecture is emerging. It involves regulators, technology giants, digital banks, AI-driven decision-making, and millions of consumers shifting their financial lives to mobile platforms. Welcome to KIYO Documentary. Today's story explores how digital banking, fintech innovation, and artificial intelligence are transforming the US financial system. Watch until the end, because the final chapter reveals a future where banking may become invisibly yet more powerful than ever before. And if you enjoy deep business documentaries like this, subscribe to KIYO Documentary for more global economic stories. To understand digital banking in America, we must begin with the institutions that shaped modern finance. At the center of the US financial system is the Federal Reserve System, responsible for monetary policy, financial stability, and oversight of major banks. Alongside it are regulatory bodies such as the Federal Deposit Insurance Corporation and the U.S. Securities and Exchange Commission, which protect consumers and oversee financial markets. For decades, large banks dominated the industry. Institutions like JP Chase, Bank of America, and Wells Fargo built nationwide networks of branches and financial services. But the system was designed in a different era before smartphones, cloud computing, and artificial intelligence. And that is exactly where the disruption began. In the early 2010s, a wave of startups emerged from Silicon Valley with a bold idea. Banking should work like technology platforms instead of physical branches. Fintech companies focused on apps instead of slow processes. They promised instant transactions. Instead of complex fees, they offered simplified financial services. Some of the companies that reshaped the US financial landscape include PayPal, Stripe, Square, and Robinhood. These platforms introduced new ways to move money, invest, and build businesses online. Suddenly, millions of Americans could trade stocks from their phones, send money instantly, or accept digital payments anywhere in the country. This marked the beginning of what many economists now call the Fintech revolution in the United States. One of the biggest changes in the US financial system is how people interact with banks. Just a decade ago, visiting a branch was normal. Today, many Americans rarely step inside a bank building. Instead, they open accounts, deposit checks, and manage investments directly through mobile apps. Technology companies accelerated this transformation. Platforms such as Apple introduced digital wallets like Apple Pay, while companies like Google launched Google Pay. At the same time, fully digital banks, often called neobanks, started gaining traction across the United States. These banks operate entirely online without traditional branches, lowering operating costs and offering competitive services. For younger generations especially, the idea of a digital-only bank is becoming completely normal. Artificial intelligence is now at the center of the U.S. financial transformation. Banks process enormous amounts of data every second. Credit histories, spending behavior, fraud alerts, investment trends, and global financial signals. AI systems analyze this information faster than any human team could. Large financial institutions like Goldman Sachs and Morgan Stanley are investing billions into AI systems that help predict market movements and manage risk. AI is now used in several key areas of U.S. finance. Fraud detection has become significantly more advanced. Instead of waiting for suspicious activity to be reported, AI can identify unusual patterns instantly and stop fraudulent transactions in real time. Credit decisions are also evolving. Traditional credit scores are being supplemented with new data analysis techniques that help lenders evaluate borrowers more accurately. Investment management is another area undergoing transformation. Automated investment platforms, often called robo-advisors, use algorithms to build portfolios and adjust them based on market conditions. In many cases, AI is becoming the silent decision-maker behind financial systems. Perhaps the most important shift in the U.S. financial system is the growing role of technology giants. Companies that once focused on software, search engines, and smartphones are now entering finance. These firms already have something banks spent decades building: massive user bases and data ecosystems. When a technology company integrates payments, lending, or financial tools into its platform, millions of users adopt those services instantly. This has created a new kind of competition, one where traditional banks are no longer just competing with other banks. They are competing with the entire technology sector. And this competition is forcing banks to innovate faster than ever before. Despite rapid innovation, the U.S. financial system remains heavily regulated. Regulators are now facing a major challenge: how to encourage innovation while preventing financial instability. The collapse of certain financial institutions in recent years, including Silicon Valley Bank, reminded policymakers that the financial system is still vulnerable to sudden shocks. As fintech and AI grow, regulators are focusing on several key areas: financial cybersecurity, consumer protection in digital banking, algorithm transparency in financial decisions, and the stability of digital payment systems. The U.S. government is also studying how emerging technologies could affect the global dominance of the U.S. dollar. This is important because the American financial system plays a central role in the global economy. The rise of fintech and AI is not just changing banking, it is reshaping the entire U.S. economy. Startups are attracting billions in venture capital funding. Financial jobs are shifting toward technology roles. Data science, AI engineering, and cybersecurity are becoming critical skills in the financial sector. At At the same time, traditional banking roles are evolving or disappearing. Economists believe this transformation could increase efficiency in financial markets, while also creating new economic opportunities. However, it also raises important questions about employment, inequality, and the future of financial access. Looking ahead, experts predict that US banking could evolve into a fully digital ecosystem where financial services are integrated into everyday technology platforms. In this future, banks may operate mostly in the cloud. AI advisors could manage personal finances automatically. Payments might happen instantly across borders. Financial services could be embedded in social media, e-commerce, and digital platforms. Some analysts even believe that banking could become invisible, working quietly in the background of daily life. And if that happens, the institutions that control technology could also influence the future of money. The transformation of digital banking, fintech innovation, and artificial intelligence in the United States is more than a technological upgrade. It is a shift in financial power. For over a century, banks controlled the flow of money. But today, technology companies, startups, and AI systems are becoming equally influential in shaping the financial world. The question is no longer whether finance will become digital. The real question is, who will lead the next financial era? Will it be Wall Street, Silicon Valley, or a new generation of AI-driven financial platforms? One thing is certain. The decisions being made today inside the US financial system will influence the global economy for decades. And the story is just beginning. If you want more deep insights into global finance, geopolitics, and economic transformations, make sure to subscribe to KIYO Documentary, because the next episode will explore another powerful shift that could redefine the future of money and global power.